So hello, distinguished speakers. I want the opportunity to thank you all for your support and welcome to this session, The Future of Wealth Management. This session is part of the 28th Convergence India 2021 Expo, and the organizers are India Trade Promotion Organization and Exhibitions India. This year is also a hybrid edition, which is why we're doing it virtually and in the physical presence as well. So let me just introduce our distinguished speakers, and then I'll hand it over to the moderator. We have Ms. Prerna Soni, Senior Assistant Vice President, Invest India. We've got Mr. Vidhu Shekhar, President, CFA Institute. Mr. Pratik Oswal, Founder, CEO, Glide Invest. Mr. Ajay Kamath, Commercial Director, Bambu. Mr. Varun Sridhar, CEO, Paytm Money. And our moderator for this session is Mr. Musheer Ahmed, CEO of Finstep Asia. There you go. All yours.
Thank you so much, and delighted to be here. We have a stellar list of panelists, so I'm going to dive in right away. I think one of the things we have to keep in mind is, as we look at the wealth management space, there's been a lot of evolution happening over the last few years, in particular accelerated over the times with COVID, right? All the panelists here have deep expertise both in the wealth management investment space as well as in the fintech space. So we will be covering topics to do with overall wealth management in India and beyond. What is the degree of move towards digital? And also looking at how users have been responding to the changes brought in by COVID-19, right? So to kick off with, I'm going to ask the panelists their view on, the face of wealth management has been changing over the past year. What exactly have you seen the difference owing to COVID-19 and other environmental factors, and what does that mean for normal advisors, right? So why don't we start off with Prerna? Prerna, would you like to give us your view on this?
Sure. Thank you so much, Musheer. And if I talk about what really would have changed in the last 1 year, I just put in 3 points here. One, of course, is the greater dependence on technology and digitization that is happening in the wealth management ecosystem. Now, the overall scheme of things and the way wealth managers are really talking to their clients has completely changed. I think there's going to be more and above dependence on technology that we will see going forward. The next big thing that I see is this theme around sustainability. What happened in Texas really changed the way a lot of people are now looking at tech, at wealth management, when the prices for electricity went from $17 per kilowatt hour to $9,000 per kilowatt hours. The credit rating of a lot of electricity providers really went down. Investors are now forced to think about sustainability. Till now, it was more of a choice, but now it is becoming a rule. And I think that the next big thing that we will see is disruption by way of lower costs for investing that a lot of investors will ask for, considering there's a focus on preservation of capital in addition to, of course, alpha generation. Thank you.
Thank you. Ajay, look, you are in the midst of the transition as such. How have you seen that impacting advisors in particular when we look at what's happened with COVID?
Sure. Thanks, Musheer. I think, digitization has always been around there, right? So, the drivers were different. It was cost and efficiency related driver. Now it's more of experience and, empowering your advisors. I think those become the primary drivers for companies to adopt newer technologies and basically digitize additional things which they manage as part of their business. I think one of the major change in dynamics is improving customer relationship, right? How do you get your advisor to understand more about the customer? There is an emotional aspect of it, and there is a sort of service efficiency aspect of it. So, we can't do much from a technology perspective on the emotional side, but, from a service efficiency side, there's definitely a lot that we can do. So obviously that, that coupled with the additional investors that are coming on board in terms of, finding right opportunities, market sentiments, etc., that kind of adds more triggers for companies to adopt newer technologies and tools to use, digital platforms. I think, Prerna mentioned a couple of things. I think, trust and technology are key, but I think it's more about how do you get customers to not only trust you, but also trust the technology that you deploy. I think that's a key thing that will play a big part going forward. Yeah, that's my take.
Sorry, I was on mute on this, right? Pratik, what would be your view from Glided perspective?
Yeah, thanks, Musheer. And I want to repeat just to I would say for my audience, I'm sort of I think wearing two hats. One, obviously I'm heading an investment platform called Glide Invest, and I think I don't want to reiterate the fact that technology is going to be a lot more important, because I sort of deal with that on a daily basis. But also as someone who is selling index funds and ETFs at Motilal Oswal AMC, what I have seen is that number one, and this is what I think is a big shift, is the fact that people now are looking at wealth management at a more serious domain than they used to last year. The number of my friends and families and acquaintances that have started managing money has gone up tremendously over the last 1 year. The number of demat accounts that have opened the last year, the number of people number of women who have sort of entered the equity, debt, and investments in asset class, that has gone up to the roof. So I do think that I think there we have seen a jumpstart in the number of people who are investing or now looking at wealth management in a much more serious way than we did, say, before COVID. Well, apart from that, I think a big shift that I see is that I think a lot of ultra HNIs are also looking to set up their own family offices, which wasn't the case before. Before, you did see a lot of them who were working with many managers, but now they are looking to sort of going out there and I think doing it themselves. There is a huge shift to DIY digital investing. A lot of investors, back in the day, who had to rely on, say, distributors, are now are sort of running through these online platforms that make it really easy for investors to participate in the equity markets in a much easier way. And I do think that back in the day, you had to be rather wealthy for you to afford a distributor. With these new apps coming in, I think even someone who wants to put in 500 rupees can go out there and invest. So I think the barrier to entry has gone a lot with these apps coming in. So I do think that and lastly, I just want to say that a lot of people are also looking at direct equity as an asset class. A lot of people used to focus only on, say, port investments like mutual funds or debt investments. A lot of I think we've seen that a lot of people are now also looking at expanding into other asset classes like crypto or even direct equity. So I think those are some of the changes that I've seen the last 1 year.
Thank you. Vidhu, what are you seeing your members? It's a wide range in terms of your members. How have they been responding? What have you seen as the changes that the CFA Institute has seen over the year? Also, maybe you could also add about how the CFA Institute has changed their courses or interaction when it comes to supporting your members on that.
Sure. Thanks, Musheer. So like the other panelists have said, in the early days of COVID, there was so much uncertainty, and we went through a period where people were not sure how things are going to turn out and what's going to be the job of the financial advisor, how they should advise and so on. As we've gone, we've passed through that phase. As you know, we are a global not-for-profit association of investment professionals, which means that our members could work as analysts, as portfolio managers, as investment advisors, or performance specialists, and many other roles in the investment decision-making value chain. So we look at these things from multiple perspectives. So I just wanted to change gears a little bit and put the client into focus here, because what is the client asking for and what is the investment advisor doing? Regardless of whether you are a single individual or an ultra high net worth family or even a sovereign wealth fund or whatever, your needs may become more complex as you get bigger, but ultimately what you need is a good asset allocation model. So the investment advisor is trying to figure out what your needs are as a client. They will write an investment policy statement for you. They will do your risk profiling. They figure out what kind of asset allocation you need. And once you have that asset allocation, then the job is to monitor it, rebalance it appropriately with time. Okay. So this whole task, it looked like we are now entering a completely new world, because capital market expectations have changed. Correlations between risk and return has changed. So what do you do? What do you trust now? And how do you talk to your clients? So really the advisors had to reinvent themselves. Okay, so we had lots of intense conversations about what's changing, what is not changing, and so on. And I'm a bit surprised that people are already starting to forget, that they were in that kind of a situation. And you got really hit by a bus, and somehow you came out of it. So in the long term, you need to be able to to have those conversations and hold your client's hand and get them through the situation so that they don't do stupid things, right? And as Pratik said and other panelists said, technology is playing an important role in this. The first thing that happened was people had to, they had no option but to switch to technology, right? So you really became, overnight, a lot of the customers became very good at managing things for themselves, right? Signing documents, doing their transactions, figuring out what's going on, and they had to educate themselves, and the advisors had to help them educate themselves. So I think that is a key change, and that is going to drive a faster adoption of digital, and that's going to have an impact on companies that have responded better. To some extent, we feel that the larger players stand at an advantage, but at the same time, people who are disruptors and are coming out with good services, they've seen so much change. Somebody mentioned opening of new demat accounts and broking accounts. First 6 months saw huge increase, unprecedented numbers, and not just in India. You have people like Robinhood and so on. The way in which the industry works has been revolutionized. We will see a lot of these things are an acceleration of processes that were already going on. Technology, regulation, competition, all these things are playing together. We can talk more about specifics as you ask your questions during this conversation. Thank you.
Thank you. All right. So I want to bring in Varun here. Varun, Paytm Money has been around for a few years now. What has been the change you have seen? Relatively newer in terms of the wealth space. So what are the changes you have seen, and what would you say is the degree of move or shift towards digital, and what are the best models you're seeing for wealth advisory in India?
Well, good evening, everyone. It's always tough to blast, right? Because then all the hard work is done. Right? But I'll try and share a different perspective with you. I think 2020 to 2030 is maybe the single best decade that the Indian wealth management industry is going to see, right? So we are betting all our energy, and we are saying, hey, the wealth business 2020 to 2030 in India is going to be great, right? It's going to be this fantastic dream run, because a lot of hard work done between 2010 and 2020 had come together. Unfortunate time got it together, but sometimes life is like that, right? And I think now that has happened, what's happened? So in reality, at least Paytm Money, we have about 7 million users, right? We see three things changing. The first thing we see changing is the millennial, and if you want to call millennial, not the American definition, the Indian definition, I think should be less than 25. 45% of my customers are less than 25, right? Now that's a big number, right? Then the second number I'll give you is about 60% of our customers are first time to markets. They've never done anything. And Pratik was mentioning about 500 rupees. Every AMC CEO I talk to, I say, when will a day come in India when I'm able to do it at 1 rupee? And when will I get to buy my burger or do my Uber ride with a liquid fund, right? Because the day that happens, India changes again, right? So if you look at it, I think trend one which has changed is huge young people saying, I don't want an asset manager, I don't want an advisor, I don't need all that, it's all transparent, it's all cheap, I have my mobile phone, I'll do it my way at my hours. And that's trend number one. Trend number two is wealth is no longer concentrated to top 10 cities, right? My bottom, let's say after the top 10 is about 40% of my business. And we are not small, right? We have 60 million customers in gold. At Digital Gold, 60 million customers, and we do about 6,000 kilos of gold in the last 2.5 years. It's an important amount of volume we've transacted. And I can tell you it's not coming from the top 10 only. It's coming all over the place, right? So I think that's the second big trend. And I think these two trends are going to fortify. But if you look at the next 10 years, I see three clear trends, very big ones happening in India. I think the first is emergence of ETFs, right? And I know Pratik, is one of the flagrant ETF in India. We decided to educate our consumers that the next 10 years, forget mutual funds, forget direct equity, go to ETFs. And we think that Indian assets will move from 0.5% to about 30% in 20 years. That's a big, big number. Right? So if you think about it like that, the whole ETF story is a big one. Second big story that we think is happening is on the bond side or fixed income side. That all of a sudden people are going to be saying, hey, my money in an FD, my money in a post office scheme, my money, I don't understand a bond debt fund. So I've never understood as a head of a wealth management firm, why the hell does a bond fund have an NAV? It's so complex. Right? Imagine explaining that to an investor who's putting money in real estate or into a fixed deposit. Usko nahi samajh aayega. And if he can't get it, he's not going to buy it. So I think there's this huge second wave of basic FD kind of products, which are going to be super simple, consumable in 35 languages at the click of a button. Because my simple experiment is if in digital gold, in 2 days of Diwali, we did more sales than the top jeweler in India. And all we did was we shifted language to Hindi. Right? I recently ran a Gujarati IPO brochure, and all of a sudden my market share doubled in India. Right? I'm a very small player who's a 6-month into equity brokerage. But I think that part of India is changing. So I think first trend ETF, second trend debt. And I think third trend is a lot more DIY, transparency. I will pay for a platform, but if you want to advise me, you better be worth it. I think Indians were educated to do insurance plans, ULIPs, post office schemes. We were educated wrong. Like I keep asking people, why do you do regular mutual funds even today? It's kind of crazy that 80% of India is advised by advisors to do the wrong thing, right? Because there's an inherent commission involved in between. So the minute you flip that and you say advisors have to charge for true advice, that's a huge change in India because consumers then need to be willing to pay for it. And I think the regulator is in that direction. So I think these are the 3 key trends. But 2020 to 2030, Musheer, I think the most exciting period, and at least we are very happy to be here.
Great. I mean, yes, going last is a disadvantage, but I also get some very good insights from you on this, right? I'm going to bring back Bambu into the picture. And Ajay, you have clients who are wealth advisor, banks, etc. How have they been responding, and what is their what have you seen in change in their attitude when it comes to working with you as well as onboarding more digital solutions?
Yeah. So I think in terms of I think the shift in the market dynamics itself, I think it depends based on the business model. I know we are all familiar with the complexity of the business model in India. Whether you do discretionary or advisory or your self-directed, which is basically execution service, right? So I think depending on what kind of business you operate in, the kind of approach you take towards digital would slightly differ. But I think taking a step back, what people are looking at is the opportunity itself, right? So are my onboarding processes automated? Are my product research techniques automated, or do I have enough capability to look at international products? And then obviously the execution part, which is pretty much seamless these days. You click a button, you move funds. You click a button, you execute orders, and the backend engine takes care of all of the complex tasks of taking the order to the broker, executing, and things like that. I think in terms of India as such, I think there is tremendous opportunity. I think, like Varun mentioned, just looking at some CRISIL stats recently, and I was actually, sort of surprised, right? If you look at the number of, or the ratio of folios of, insurance folios to working class population, it's like 10%, or it's like, the mutual fund folios to working class population is 10%. Versus the insurance folios to working class population is about 40%, which means there is a huge dearth of opportunity that the wealth market can plug in, right? The other sort of relevant stat would be how many mutual fund distributors do we have? 2.3 lakh distributors versus how many insurance advisors do we have? 23 lakh insurance advisors. So that's the kind of gap we are looking at, and I think the only way you can plug that gap at scale, reaching those tier 3, tier 4 cities, is by using technology. So we have seen a lot of demand. So we were on the right side of COVID. if you look at it, so we are a technology provider. So obviously, in terms of demand and inquiries, things have just gone skyrocket. From a tier 2 company to a top tier digital bank comes to us and asks for wealth solutions. As I said, depending on the business model, what you cater to and the kind of customers you cater to might vary. But in terms of interest, they are all out there. But the key part here is, the personalization aspect that Varun also mentioned about, right? So how do you assess that data? What is the sort of behavioral science methodologies involved there? How do you personalize that product offering? I think the digitally engaged customer needs all of those additional touch points in terms of making that solution or advice more tangible, and that's what I think we as a platform are trying to provide. So in essence, we want to build a personal CFO for every individual. What that means is, from a quality standpoint and accessibility standpoint, everybody out there should have access to quality advice and should have that available 24/7, irrespective of whether he has 100 rupees to invest or a crore to invest.
Thank you, Pratik. Motilal Oswal has moved from being the traditional broker. You were among the largest in the country, and now with Glide Invest, you're looking to offer something that's more digital first, mobile first in some instances as well. What led to that transition as such, and what are you been seeing, especially from a mass affluent and the HNIs? How have they responded to it? Do people still prefer calling up and saying, I want to do my trades, or having that advisor to them and the broker that they trust, or are they more than happy to come on board and do it straight to market, as it were?
Yeah, I think there's two parts to this question. One is obviously, what about the broking business? I think the stock broking business has been around for almost 35 years now. And obviously, it's you have full service brokers and you also have discount brokers. And if you look at the US, how things have panned out there, you still have both. You still have full service brokers that provide sort of holistic financial planning apart from execution services. And then you also have discount brokers who are now obviously doing a lot better in terms of volumes. I do feel that and this is what we've seen in our broking business that's I think volumes have been lifetime high, and the business has never been stronger in the last, say, a few decades. But I think what is interesting is that today, I think a stockbroker is not really a stockbroker. He or she can also become a wealth manager. He can also be an insurance agent. He can also be a loan agent. He can be a financial planner. He can. So there's a lot of roles that a touch point relationship can happen apart from just executing, buying this stock versus that stock. So I do think that I think you have and there are people out there who obviously there are a lot of DIY folks who want to go out there and just buy execution. In which case I think as like a low cost discount broker makes perfect sense. But there is a huge amount of people in this country who are not really as financially savvy, who don't really understand what to do and how to do things, which is where I think having a touch point makes a lot more sense. So I think we are pretty convinced that obviously the traditional way of business will also be going, but obviously it's important to have tools in place so that you can also be able to I think use data very effectively in terms of targeting, in terms of personalization, as I think Ajay pointed out earlier. In terms of I think Glide, that's more of I would say a platform that helps deliver quality wealth advisory to customers. Today, I think if you look at a lot of our customers that at least I have seen, in my experience in the last year and a half, I think wealth is a very sort of complex space where you have so many options. You have 5,000 options, you have 5,000 mutual funds, you have debt funds, you have acronyms like ETFs and AIFs and PMS and etc. So the whole idea here is that can someone come in with a solution where they can offer you a portfolio in a very low cost, diversified way, which is where I think Glide comes in. Obviously, in the US, you have a lot of robo advisors out there. So the idea is that can you build a solution which not only provides you a platform of choice, but also gives you a solution where I think they get to make all the calls and be able to do everything for the customer who doesn't really know how to navigate the system. So that's I think essentially what I've seen.
Thanks. Prerna, when Invest on India is dealing with a lot of startups who are in the space, as well as bringing in startups who are coming in from overseas, what's the trend you're seeing when it comes to catering to the mass affluent and high net worth individuals?
Sure. So I tell you, there is one big transition which has happened in India. Uh, if we talk about the kind of fluctuations that have happened in the market over the last 2 decades, all investors all over the world would have had to deal with the tech bubble. They dealt with the global financial crisis, and today we're sitting with COVID. The one interesting thing that I think happened in India is through those two crises that happened in the past, there was no reduction in interest rates in India, which was actually very unique to our economy. Be it US, be it Europe, be it Japan, everywhere we saw interest rates went down. So for a lot of investors within the country, FD was a very obvious solution. Today we're sitting in a position wherein investors need to go beyond because they've realized that the kind of interest that they are earning on the fixed deposits that they've made is really, really meager, and they need to find alternatives. I think that is one big change that has happened. And today, when we talk about investors in particular, I think when they reach out to their wealth managers, when they're looking at investing in equity, they're looking at other alternative spaces. For them, a wealth manager is now more so. You know, it was earlier a very small chunk of their wealth which was going out to a wealth manager, and the wealth manager actually was privy only to that. Today, I think we're in a position where, as an investor, one, of course, with the thought of capital preservation and building that overall financial ecosystem, a lot of investors want to understand, okay, you know, about health insurance. There are a lot of people who would want to get that. A lot of people are now reaching out to their investors with an overall view of understanding what can they do with their money. So wealth management, I think, has to go above and beyond just equity. And another trend I think we've seen is there was a lot of passive investments that have happened in the last 1 year. A lot of investors have started going back to gold. There is a view, of course, on ETFs, and I totally agree with Varun that ETFs are going to go up. But if you take a contrarian view here, actually, this is the time when active managers can come back into the system and show that there is a potential for alpha generation and start luring back those HNIs who are now, you know, sort of transitioning into passive investment to come back and start looking at some active investments again.
Thank you. Sorry, balancing the mute button, right, as we get used to online presentations. Vidhu, I'm going to bring you back in here. How do you feel that in a growing Indian market where affluency is increasing, affordability is increasing, and more people are now aware of investment, there's also been a lot of push by the various governments over the last 20 years to provide tax rebates, etc., to encourage people to invest in the markets. Now that we have a good amount of individuals in India, about 100 million plus, with per capita income of over 10,000 US dollars, what do you think wealth tech and digital wealth managers need to focus on to get these customers and keep them for life, right? One of the challenges is always customer retention. So from your perspective, what will be the key elements on that?
So one thing we must understand that wealth follows income. So we have a process of people getting more income, and as they get more income over a few years' time, then the wealth grows. So we've seen this in China before. The China wealth management industry just exploded, but that took some time, and that was preceded by an increase in income. So same thing is happening here. Now, I think we are in the middle of that inflection where more people have been, like somebody said, moving from lower income to middle income and middle income to upper middle income. So the wealth is growing, and I think Varun pointed out the fact that we are getting more and more people to come from the smaller cities as clients for many of our wealth management firms. So we've already seen through this panel that that growth of this industry in India is coming as much from entry of new clients as it is going to come from the growth in wealth of existing clients. And that provides an opportunity to new firms, some of which are represented here, who are able to have a good value proposition for their customers, and they're able to keep them. So people are going to experiment, and it's not easy to solve the the customer retention problem in today's time and age, and that will determine who does it best. Will determine who comes out the winner. If you go back whatever 15, 20 years, ICICI Direct suddenly became very big. They became one of the big retail brokers because they were able to move quicker than their competition. Then you go forward 10 years and you have somebody like Zerodha appearing from nowhere. I'm talking about different segments, different things going on. So you will find, I think again I will go back to what Varun said. This next 10 years is going to be a period of growth and a period of new customers entering. I don't know if I've answered your question properly or not, but it's very hard to do crystal ball gazing and to say what exactly is going to work. But whoever does the job better will win, I guess.
Yeah, I mean, crystal ball gazing is tough, but we're probably giving people some insight on how we can build on this, right?
And at the end of the day, but there still be always room for the for the advisor. That's not going to go away. Whatever happens, the advisor, a good advisor, will still be able to build a business for themselves. They will be using technology platforms, but there's going to be a big segment out there who will need handholding.
Vidhu, Varun, bringing you back in, right? We've had the mention of Robinhood. We have some of the large Indian online retail trading platforms as well. How do you see the models evolving, right? Are we going to be looking at no fees, low cost brokerage, and that's going to grow, or are we going to see a maturity in how wealth techs and online trading platforms can handle the incoming increase in volumes?
Good question. I think if you look at it fundamentally, so we launched our equity broking business 6 months back, right? And I'll tell you how we thought about it, because maybe we are the youngest entrant to full service brokers, and then there was discount brokers who done a fantastic job, and then there are boutiques, and then there are algo brokers only, right? So it's not that in the high frequency trading segment, we should talk about it at one moment, that's expanding rapidly, right? So there's also that happening. So all these now different broking models emerging, and we were launching in that. And the call we've made is as follows, right? So we've said essentially, and I'll be very transparent about it, and then I can tell you how I see the broking industry evolving. But essentially, we've said that to run a platform like Paytm Money on equity brokerage, our biggest advantage should be technology, right? So last month, for example, Paytm processed as a group 1.2 billion transactions in a month. Okay, that's what Paytm does as volume. So technology at scale at 99.99% uptime is something that naturally should come to us. And therefore, with that thought process, we said, if in India today, a large broker, let's say, executes anywhere from 1 million trades a day to 2 million trades a day. And let's say, in India, the regulator decides to do either a third section or decides to do fractional investing. Right? Now, either of those two things happen, you're looking at volumes multiplying by 20, 30x. Now, all of a sudden, the minute that happens, I can assure you 95% of all brokers in India will collapse. Because the technology stack has not been built keeping in mind what is fractional and what is technology, what is a third session going to look like. And I think that's the problem, which now you can see across the industry. February was a bad month. The exchange had its issues, everybody had its issues, and it starts to be a problem. It starts to be a discussion which RBI say we start to talk. So pillar one is technology, because we need to be able to build a platform that can take a user who wants to do his first option or his first future or his first ETF, all the way going up to somebody who wants to do high frequency trading and wants to execute 5,000 orders a day using an algorithm. Now, to get that all into one mobile app is our bet, right? And that's the bet that we are placing on the market. So that I think is trend one. Now, as far as pricing is concerned, I think it's a function of very simple, what's your cost, right? Like I used to live in Paris, I came back to India because I bought a full service broker in my life in 2015, right? And when I went there, I met all these Gujarati folks. Okay, very funny thing happened, and I met this customer of mine in Ahmedabad who taught me one very simple thing in life. He says, you don't look for revenue, you look for cost management, and then you make some margin, right? And he kind of changed my mindset to running a business. And I think as long as you're able to keep your costs really low, so I run a tight ship. We have a total team of 350 people, and we manage about 7 million customers on that, and we are very digital, right? Like we've remained so. And as we do that, and as we expand, we're still trying to solve everything on a mobile app. The trick lies that we reduced the pricing from 20 rupees in discount brokerage to 10, right? So we've come in, and I think we are by far for best-in-class brokers. We brought the industry down by half. Will somebody undercut and come and say, hey, this is going to be zero? I hope so, as long as they're able to manage the cost, because then the industry becomes more efficient, right? And I really hope that we're able to tighten our belt. Like, in COVID, everybody's doing fitness and immunity, right? I think the industry needs to do that. We need to shed excess fat, become thinner, leaner, and be able to give the benefit back to the client. Because the problem that we're trying to solve in India, I think, is how do you go, and Vidhu spoke about China. China has 600 million mutual fund investors. We are talking about 40-50 million, I think till we hit 500 million Indians having one mutual fund for 1 rupee or one ETF, and I hope Pratik launches an 1 rupee ETF, right? I will be his first big distributor, right? But I think the day that happens, all of a sudden you have the Uber driver saying after every ride, I want to save $5. And I think that's the future of broking, where the costs are going to come down, the pricing hopefully remains, and you're going to make money from 40 business lines or 50 business lines. At Paytm, we have 50 business lines. So I'm looking at, let's say, Pratik as an example, or Ajay as an example as a customer, and saying, can I, over the next 15 years, make revenues from 50 different products? And not say that I want to charge him for advice or broking, because then the cost per transaction is too high, right? And as we go into saying, every day, Paytm as a broker, today I do about 2 lakh trades a day, and I'm 4 months old into my business, right? The day I get to, let's say, 10 million trades a day, which is our goal in the next couple of years or 3 years, how am I going to be able to make a very small amount of money so my overall revenue remains good? Because I hope I don't have more than 400 people. That's the trick, right? My only cost is that. So I think that's the broking industry going forward, very technology-led, but 2 extremes, a very simple user and a high-frequency trader. Right? You have to fit everybody into a mobile phone, eventually into a watch, or maybe a chip inside your body. Right? I don't know how technology is going to change.
I like this crystal ball grazing where we're going right into the future. Funny thing, right? There are actually models where people use technology to monitor traders' emotions or their blood pressure to see how tense they are and how likely they are to make mistakes. This is done by an MIT professor a few years ago as a test. Pratik, I want to bring you in here, right? We are talking about discount brokerage, that may or may not undercut traditional brokers and those who have been in the business for a while. How do you see that growing and responding to that from a transition from traditional brokerage to digital brokerage? And can traditional brokers who do take the digital path maintain the rates at which they are? And how will they differentiate without the price point?
Yeah, I think the transition is happening, so you are seeing a lot of, at least traditional brokers who are expanding to newer categories. It used to be only a stock broking house. Today, the opportunity, as I said, I think earlier on that, you have the opportunity to sell mutual funds, to sell loans, to have insurance, to have financial planning, advisory, so I do think that, financial services as an asset class has a lot of other business models that can be enabled through the customer touch point. I think customer acquisition cost is actually something which we talk about, and then we always talk about how can we cross-sell the customer once we've acquired them. So here I think we've acquired millions of customers, and so far I think we only managed to sell broking services. But can we expand that to more than just broking? I think that's the question that really a lot of other traditional brokers are asking, and that's how I think in the US, if you see full-service brokers, they are essentially selling a lot more than just broking services. If you just want execution, then I do believe that a lot of people will just be better off with a discount broker. The other thing is research, and I think this is important because research is something which is very core to at least our DNA. I think the first ones to launch research back in the 1990s, and this is before anyone thought what research was, and that has been a quite big factor to a lot of the I would say growth that we've had. So I do think that is something which is still in demand. In fact, that is something which I think pulls people a lot to traditional brokers, and obviously you will have research coming in from discount brokers too. But I do believe that because you're charging customers, you can essentially use soft dollars to go out there and I think really produce good quality research so that you can really guide customers in the right areas. And lastly, I think so and this is somewhat of a behavioral thing. People say that investing is more about behavior and less about what you buy, how you buy, which stock you buy. I do believe that someone who is DIY, who is going out there and buying stocks and I would say mutual funds, essentially in a country like India, you really need someone to really help you manage behavior, or you have to be well-read enough for you to manage behavior, especially during tumultuous times. Most traders unfortunately tend to lose money over time. And I do believe that, having a full service broker, having such research or advice can really help in, I think, creating wealth for customers. So I do think that these are some of the things which will, obviously the market will not be as big as what it was. You see a lot more leg ahead of discount brokers and with more and more customers coming in. But there are certain things that, I think with the market, which we are sort of tuning towards. I think a few weeks back had close to 14 or 50 lakh trades in a single day. So there is a lot of demand coming in for these sort of things. And we do believe that, by being customer centric in whatever small needs a discount like a traditional broker may have, you can actually have a sustainable business going forward.
Thank you. Vidhu, I'm going to bring you back in, and you did mention, that there is going to be the need for both the fintechs as well as the wealth planners. In the modern digital context, how do you think holistic wealth planning can be achieved using fintechs and wealth techs like Glide potentially? And I'll come to Ajay soon on that. But how would you by Bambu? But how do you think, from your perspective, fintechs or wealth techs can support holistic wealth planning?
So yeah, I think goal-based goal-based investing is something very important which we must look at, and which is getting a lot of traction at all levels. Even for the family office and as well as the HNI and so on. And I think some of this transition, we found it very hard to transition, even though we have this cost pressure that we know that alpha is hard to generate. And you need to watch your transaction costs. Still, the mutual fund distributors dominate, right? So where is this transition going to come from? It's going to come from new players who are going to, what is the word for it? Disintermediate the current channels, right? And the problem there is that right now the whole ecosystem seems to be wired in the favor of the old channels. So if you want to create a market for the buyers of ETFs, if you want to do this very micro credit, micro savings, micro insurance, micro mutual fund type of things, that will require some amount of product innovation as well, where we have to work with different players in the ecosystem. I think a lot of conversations are going on. It's not clear to me where these are going to land. This conversation, we haven't really talked about the lower end of the market, which is also very, very important. Somebody talked about the Uber driver. Some of these things are not going to happen automatically. Like in the payment space, India has been seen as a leader of innovation because we created an ecosystem that on top of which, the stack and everything, other people can ride. I think something similar needs to happen in terms of product innovation, with exchanges and clearinghouses sitting at the center, and people innovating in products. I don't really know. Maybe this is something that we can talk more in depth and do some research as to how we should go forward. But there is a lot of scope for doing things in new ways.
Thank you. So now bringing in Ajay and Bambu. Ajay, what are you doing to enable holistic wealth planning, right? Or platforms like yours? What do you see your what's the right term for it? I wouldn't say competitors, but your peers and you trying to achieve. Because as I think some of you also mentioned, in a market like India with 1.4 billion people and our affordability and increasing and affluence increasing, it is important that the ecosystem grows. It can't be just one or two dominant players. As the ecosystem grows, the competition grows, and it's best for the end consumer. But how are you seeing and how are you supporting holistic wealth planning for your clients and then effectively then the end consumer?
Sure. I would like to give an example, right? My own personal example. So, many years ago, when my father asked me to buy insurance, let's say plan, I never asked him why, right? I just bought the insurance plan, paid those monthly or annual premiums, and it is still, the clock is ticking. I'm still making a premium, but what is the plan for, right? I mean, there is no let's say end goal. I mean, it's a plan where you're just, it's like a bucket where you're just putting in the money. So I think Pratik mentioned a while ago that the lines between asset management, insurance, wealth management, they're all blurring quite a bit, right? So, traditional manufacturer or a distributor is now, buying and building distribution capability. And a bank is now manufacturing funds, right? And insurance are obviously looking at overall wellness. So all of these are sort of becoming a bit, I would say, convoluted to an extent. So I think, but the I would say the underlying objective is to understand client needs, which is the main goal. So the key driver, I would say, is getting access to the data, which is where the players such as PFM tools or even aggregator models that are coming up in India now would play a key part, because then you get access to customers, financial aspects across the whole let's say life cycle, right? Whether it's savings, investments in real estate, capital market exposures, gold, or anything that he or she has. So when advisors get access to that kind of data, they can build a more holistic plan or an advice around it. I think that is the crux of the thing. So access to data, making that, or I would say, sniffing the right information and creating right insights for the advisors and for the clients, I think is the next sort of big thing, because I think there are a lot of platforms today in terms of trend, I think, which are automating your onboarding process and transactional process. I think the next big thing would be understanding clients' holistic financial exposure and making that recommendation. I think I keep touching back on Bambu for some reason, because we are pretty much in this space. We have seen the space evolve over the last 5-6 years since Bambu has been there, and we work with global clients. So I think from a holistic planning standpoint, I need to understand customers' history. So we are building, what Varun mentioned, the crystal ball, right? So we are actually building a crystal ball which will take in your historical inputs in terms of your family, employment, similar exposures in other industries, etc. And then it'll make sort of a milestone plan of your life event. And based on that sort of view, he or she can make those next level moves in terms of whether they want to make a financial commitment for those key milestones in the life. So I think that is the key thing. So data is the oil here. So data is the gold. So we need to access data, and we need to create right insights. So obviously technology again plays a key role there.
Yeah, I mean, probably we'll soon say data is Bitcoin in a few years' time as we look at the value of that. Prerna, I'm not going to put you in the spot asking you about the cryptocurrency market as we await the Indian Parliament and Ministry to decide on that. But I'm going to come to you and ask you about what do you see as the key trends in the wealth management space for the next 3 to 5 years. And I'm going to come to the rest of the panelists so you can also think about it. I'm not looking at crystal ball grazing or glazing as it were, but I want to see what are going to be the 2 or 3 main trends that people can anticipate as end customers, right? As an end user, what can I expect from the fintechs and wealth techs, as well as the digital brokers? On the other side, for these companies or building solutions, what should they be looking out for? So this is probably where I'm looking to approach this. We'll start with you, Prerna. Your thoughts?
Sure, thank you so much. So, the way I look at it, I see portfolios in the future will need to weather all storms that come their way. I see allocations happening across 3 levels, which will consider the risk, it would consider the asset, it would of course consider the product. If we talk about fintech and wealth tech in particular, I see a lot of risk modeling happening through technology in the future. So, as a lot of us has mentioned in this panel discussion, today it's going to go beyond just equity. It is going to go to wealth management. It is going to go to overall investment planning, wherein with the kind of information I see risk modeling happening and model portfolios being created for investors at a very large scale, which then can be personalized using AI and sending it out to all investors. In addition, coming from the view that I come from, I look at institutional money coming into the country. I look at sovereigns, I look at pensions. I see the kind of investments that they are making in the country and the kind of alpha that they are generating. So, I know a Canadian pensioner sitting in Canada is benefiting right now from India's growth story. And that's because the Canadian pension funds are investing in India. We also know our pension systems, our Provident Fund and NPS are restricted in the way they've invested in the country. So for a lot of Indians, a lot of millennials who are looking to generate that return, I see a lot of them now transitioning towards the equity market. They will be looking at alternatives beyond the traditional routes. They would go beyond gold and mutual funds to actually understand the market. And that's where, in my view, all these fintechs and wealth techs would change the view. Of course, for India, housewives have changed the way, a lot of markets have been disrupted in the past. And I see this market getting disrupted in the future as well, when a lot of women in the country who currently are dependent on their families for finances will actually start generating money for themselves through very, very simple systems that have now been brought into the entire ecosystem. I see there is going to be a huge disruption happening in this entire market over the next 10 years. Thank you.
Pratik, your views on this?
Yeah. So I think when it comes to wealth management, I do believe that there will be I would say huge shift towards younger people coming in, which we've already discussed in today's session. But I do feel that there's going to be an expansion in asset classes. Today I think a lot of people were only looking at equity or only looking at FD. I do think there's going to be expansion in other asset classes. Gold is now becoming a permanent asset class in people's portfolios. International equity, people are now looking at going abroad and I would say buying stocks like Apple, Google, Netflix, or buying the indexes out there. That has been a huge shift, at least what I've seen in the last year and a half, 2 years. So I do think that there have been more asset classes which will be coming into people's portfolios. I think companies used to IPO much earlier on. But nowadays, companies don't really IPO before they hit a couple of $1 billion. So I think there are investors out there who will be looking at buying private companies as well. So I do think that a lot of expansion asset classes will happen in people's portfolios. There will be a huge, also not a huge, but if you see in the US, a lot of the active money, we obviously have this active versus passive debate, which is still going on for I would say many decades. But a lot of the active money has actually left the mutual fund industry and gone towards alternatives, towards hedge funds, towards solutions, which is also something that I see happening over the next 3 to 5 years' time. So a lot of more interesting, I think, I would say type of structures coming in the alternative space, which is going to be huge in the next 5 or 10 years' time. So I think those are some of the things which I do see I would say changing over the next say 3 to 5 years' time.
Thanks. Varun, I'm going to add a little spin to this for the audience sake. Paytm has now multiple fintech divisions, as it were, starting off with payments, and now you have this. And we are looking at Paytm as one of India's super apps, right? So how do you see that integrated? One, for Paytm itself, and what can customers expect? But secondly, we may see others also get into that space very soon. And look to compete from a super app perspective. So, what can the customers expect on that space?
Yeah, no, I'm not going to. I'm going to try and reserve a bit the answer. I'm not going to try and reveal everything, but and I can't. But I think fundamentally, Paytm, as we start to do 1.2 billion transactions, and we just think we're at the start, and I think next 12 to 18 months that number will double. You just imagine the number of millions of users experiencing the platform. The day the manufacturers, the stakeholders, a distributor like us, broker like us, so all the stakeholders, and when everybody comes together and says, I want to enable now 300 million Indians to be able to buy one stock, one ETF, one gold, one mutual fund, one bond, whatever, one piece of real estate, like Pratik correctly said, one piece of a small listed startup somewhere. Somebody wants to buy half a share of Zomato. Can he or she, somebody eats Parle G biscuit, can he buy a share of Parle? It's a biscuit company. Yes, I think. So that expansion, I think Paytm is going to come in, and we've already started to do it. Where I'll give you the example of IPO. All we've done is we've made the journey for a Paytm user super simple. And I can tell you, we start to hit upwards of 2% market share, and we are very, very young in the broking business, 4 months old. Right? And that starts to happen because all of a sudden, there's this person in Hampi who is writing to me on Twitter saying, Varun, your IPO application is not working. This is the first time I've done it. And I'm like, dude, it works, but it doesn't guarantee that you apply at Paytm and you get subscription. And I can't guarantee there's a lottery system running and there's oversubscription. But what starts to change, I think, is as we become a super app, as we start to crunch onboarding, crunch the in-between journey, crunch the payment journey, it all becomes one click now. Right? And I think user convenience will take over. We are able to bring in the cost advantage. So I think that you will see. And I hope that answers your first question partially. On the second question that you initially asked, I can't give you all the details, right? The product roadmap is an exciting one. But I think the second part of the question, about 3 to 5 years from today, I think 3 things will happen. First, a lot of table conversation in India 5 years back was around Hollywood, around sports, around different things. Investing was never part of a dinner conversation. What's nice now is 100 million Indians are talking about kaunsa stock kharidna hai, kaunsa stock bechna hai, over dinner, over coffee, over all sorts of things. And that's fantastic. Right? I think that's the big thing that's changing over the next 3 to 5 years. The second thing, I completely agree with Pratik, is going to be about diversification. So my bet or our bet as Paytm is ETF plus bonds, right? Because we think people want fill it, chuck it, forget it. I've given this money. Can you give me 9% back? And I think the third thing is going to be the whole advisory business is going to emerge, but with all the young people challenging the advisors saying, dude, why do I pay you 1% commission on regular mutual funds? Why do you want this from me? Right? What's the why? That why is going to be asked from everybody around this room. And I think, people like me have to stand up and say, this is why you have to pay me. That's a tough thing to do. But I think that question is going to make sense.
Thanks. Vidhu, I'm going to bring you in. One of the things I would like to hear from you is what do you anticipate from a policy and regulatory perspective 3 to 5 years in to facilitate this? We do have a fairly technology, fintech positive policy in India driven by the government, and even the regulators are fairly positive. Of course, trading in securities, etc., is restricted. But what do you see in terms of policy coming in? Have our wealth techs and fintechs been well behaved that the regulators can do more now, or do we need more oversight in the coming days?
Sorry, I was on mute. So, no, there is still work to be done. The regulators generally are slightly behind the technology players. So, you know that the number of registered investment advisors is very low right now, and there's all kinds of debates going on, conversations about the business model implications of SEBI regulations. So I think there is still work to be done. It's something which we did not discuss on this panel. And I said early on that technology, regulation, and competition are the 3 main drivers. And we haven't really seen, I don't have answers, but I think how SEBI will evolve its rules will have an impact on who can do what. If you think about the say right now, the distributors have a lot of power, okay, because without the large distributors, you can't grow your AUM. But once the new players, I'm already seeing the new players going to asset management firms and telling them that build this product for me and I will distribute in this different way and so on. So every time that you have a product related conversation, the regulator comes in, so only thing I can say is that regulators will play a role, good or bad, we don't know. And there is a need for more focus on those conversations.
Right, Ajay, I'm going to give you the last word. You are looking at both sides, consumers, as well as looking at the fintechs and the big banks. What can we see in the next 3 to 5 years?
Sure. I think all the panelists actually touched upon several key points, but I think maybe a couple of them to add to that list would be the transparency in terms of how things are done from an advice perspective or portfolio management perspective, etc. I think when you're charging, like Varun mentioned, you're charging 100 rupees or 10,000 rupees or whatever that fees might be, you will probably have to make those things more transparent to the customer and probably even to the regulator, right? So the regulators are always constantly pushing for more disclosures, better reporting standards, and these things are always evolving. So I think that is a key trend to watch out for. And probably one more thing, which is maybe not mainstream, but I think soon catching up in India as well, is socially responsible investing. So, people are investing in ESG specific themes. This is again driven in several markets, by the regulators. But I think in India it's not there yet. But there are investors who are savvy enough to push their wealth managers to find green concepts and green themes for them. So ESG related investments and underlying sort of tools and technologies will also evolve as a trend. Yeah.
Thanks. So I'm going to wrap up before Jared comes in. So thank you all. Really good insights here for all of us. We've seen all sides of the industry, and I think three key takeaways for me is, one, we are seeing the transition to digital with more consumers being very comfortable with it across mass affluent to high net worth individuals. But in the coming years, we will still see advisors and brokers play a role as clients transition. Number two, the type of wealth techs coming in will be of all sizes. We will see competition. We will see both a competition for discount brokerage, but also focusing built on high net niche services. And lastly, we will see a variety of diversification when it comes to the products we are seeing, right? Like with Ajay mentioning about ESG and other things, we may also, if there's a green light, see investment into alternative assets. So thank you everybody for listening into this stellar panel, and I'll hand it back to Jared and the organizers. Thank you so much for having us.
Thank you, distinguished speakers.